Here's a plot twist no one saw coming. The United States just gave China permission to buy Nvidia's most powerful AI chips, and China said no.
Wait, what? Hold on, let me just make sure I heard that right. China, the country that's been desperately smuggling Nvidia chips through third-party middlemen, hoarding them like gold bars, China is now refusing to buy them legally?
That's exactly what happened. And honestly, Maya, when I first saw this, I thought it was a typo in my Bloomberg feed. But no, this is real life in 2026.
Okay, so let's back up for the listeners who've been living under a rock. What exactly went down?
So on December 8th last year, Trump announced that the U.S. would allow Nvidia to sell the H200 chip to China, with conditions, a 25% surcharge payable to the U.S. government, and exports only to approved buyers. The formal regulation went into effect January 13th. This completely reversed Biden-era export controls that had been designed to choke off China's access to advanced AI silicon.
And for context, the H200 is Nvidia's second best AI chip right now. Not the Blackwell B200 at the bleeding edge, but still absolutely critical for training large language models.
Right. And the assumption was China would be thrilled. Years of export controls, all that friction, all those workarounds, suddenly it's over. But instead, Chinese customs authorities were quietly instructed to block H200 imports. Chinese tech companies were told not to purchase unless absolutely necessary.
That is deeply ironic. So why? Why would China turn down chips they've been desperately trying to get?
A few reasons. First, there's a nationalist political dynamic. Xi Jinping cannot be seen publicly accepting American technology right now. It undermines the entire narrative around domestic tech self-sufficiency, what China calls zili gangsheng, basically self-reliance.
And they've actually made real progress on that front, right?
Significant progress. On February 17th, at a meeting between Xi and Chinese tech executives, Huawei founder Ren Zhengfei told Xi directly that his previous concerns about semiconductor dependency had eased. He said Huawei is now leading a network of over 2,000 Chinese companies working to achieve more than 70% self-sufficiency across the entire semiconductor value chain by 2028.
2,000 companies? That's not a startup ecosystem. That's a national mobilization.
That's exactly what it is. And then there's DeepSeek, the Chinese AI company that shocked the world earlier this year. They trained their latest model on Nvidia's Blackwell chip, which is theoretically even more restricted than the H200, using a technique called distillation, essentially bootstrapping from existing American AI models. And they did it at a fraction of what US labs spend.
So from China's perspective, they've already found the workarounds. They're building the domestic stack, and now Trump offers them chips with a 25% markup and geopolitical strings attached. Of course they said no.
Exactly. And that's the first big insight today. The Trump H200 reversal is less about helping China and more about what it reveals about Washington's strategic confusion.
Okay, I want to dig into that, because on the surface, this looks like Trump just caved to Nvidia's lobbying, right? Jensen Huang has been very vocal about how export controls hurt Nvidia's business.
That's the cynical read, and there's truth to it. But there's also a genuine policy debate happening. One camp, the hawks, argue that any chip sales to China, even with a surcharge, are strategically suicidal. Bipartisan lawmakers in Congress have been pushing back hard, arguing H200s could end up in Chinese military AI systems.
And the other camp?
The pragmatists argue that China will get these chips anyway, through Singapore, through Malaysia, through 100 gray market channels, so why not capture the revenue, maintain relationships with Chinese buyers, and use conditional access as leverage?
That's actually not an unreasonable argument. I mean, during the Cold War, the US sold grain to the Soviet Union.
Right. And the Council on Foreign Relations put it well. The new policy is, quote, strategically incoherent and unenforceable. CFR's analysts said you can't win an AI race by trying to control the diffusion of technology that your own private sector is incentivized to spread as widely as possible.
So we've got this bizarre situation where the policy is incoherent, China is refusing the chips anyway, and the actual winner in all of this is
TSMC. Which brings me to the data point that I think really matters here. TSMC reported a 35% jump in fourth quarter profit, beating estimates. January 2026 revenue was up 36.8% year over year. They're allocating $56 billion in capital spending for this year alone.
$56 billion? That's more than the GDP of some countries.
And they're not just spending in Taiwan. Their Kumamoto fab in Japan, which started production last year, is now potentially skipping ahead to 2-nanometer technology in its second phase. There were reports in TrendForce in December that TSMC is considering leaping from the originally planned 6-nanometer to 2-nanometer at Kumamoto Phase 2.
That's aggressive. I was just reading the Nikkei Asia piece on this. They called it TSMC turning Japan into its third advanced chip base, which is a massive statement given that, 15 years ago, Japan was completely out of the advanced semiconductor game.
Completely. TSMC is essentially rebuilding Japan's semiconductor industrial base. The Kumamoto facility currently employs around 2,400 people, with over 500 new local hires as of last spring. And the Japanese government has been massively subsidizing this. The Ministry of Economic Trade and Industry has been throwing money at this as part of their semiconductor revival plan.
So you've got this really interesting dynamic where, amid all this US-China tension, Japan is actually benefiting enormously by positioning itself as a neutral, reliable manufacturing partner.
That's a key theme today, and I want to explore it more. Because Japan isn't the only Asian country making a play here. Let me throw the India numbers at you.
Please, because what happened at that AI summit last month was wild.
Wild is the right word. India held the AI Impact Summit in February, and Bloomberg reported that India is eyeing over $200 billion in AI-driven investments over 2 years. Reliance, Mukesh Ambani's conglomerate, announced plans to invest $110 billion into data centers and infrastructure. Adani outlined a $100 billion AI data center build-out over the next decade.
Those are staggering numbers. And this was all announced with Sundar Pichai, Sam Altman, and Dario Amodei sitting right there in New Delhi?
All three of them in the same room in February. Bloomberg called it, quote, "why big AI is obsessed with India." The combination of cheap engineering talent, a massive domestic market, and now genuine government commitment to AI infrastructure, it's a compelling story.
Okay, but devil's advocate here. India has been the next big thing for technology investment for literally 20 years. What makes this time different?
Fair pushback. And Bloomberg actually surfaced that exact tension. There's a report from February 24th titled, "India AI Impact Summit Exposes Fears That US and China Will Dominate Tech." The concern is that while India has the talent and the ambition, private capital, venture and private equity hasn't followed through in a meaningful way. Public markets are booming, but the startup ecosystem is still underfunded relative to the opportunity.
So it's still vision versus execution.
That's right. And that contrast, vision versus execution, is actually the thread that connects everything we're talking about today. Trump's chip policy is big vision, messy execution. China's semiconductor self-sufficiency push is long vision, grinding execution. India's AI ambitions are bold vision, questionable execution. And TSMC, pure, relentless execution.
Which is why TSMC stock hit a record high this year, and nobody else in this conversation is printing 36% revenue growth.
Exactly. Goldman Sachs raised their price target on TSMC by 35% to NT dollars 23.30. Shares had their largest single-day rally since April, up nearly 7% after those earnings dropped. Okay, so we've covered the main story, the H200 reversal, China's counterintuitive refusal, TSMC's dominance, India's ambitions. Let me ask the question I think everyone is wondering. Does any of this actually change the trajectory of the US-China AI race? That's the right question, and honestly, the answer is more complicated than most pundits are admitting. Here's what I think. The chip export control strategy was always predicated on a theory of technological containment. The idea that if you deny China access to advanced chips, you deny them access to advanced AI. But DeepSeek blew that thesis up.
Because they did more with less.
Not just more with less, they fundamentally demonstrated that algorithmic efficiency can partially substitute for raw compute. Senior analyst Jake Lai at Counterpoint Research called 2026 another breakout year for AI server demand, but he also noted that the gap between what the best Chinese labs can do with constrained compute versus what US labs can do with unconstrained compute is narrowing faster than anyone in Washington predicted.
And that changes the risk calculus entirely. If the containment strategy isn't working, what's plan B?
That's what Washington is desperately trying to figure out. And the CNBC report from January 22nd, China hawks mount pushback to Trump's AI chip plans, captures this internal fight. There's a bipartisan coalition arguing that the H200 reversal proves the administration is prioritizing trade deals over national security.
But we just said China is refusing the chips anyway. So who's actually winning here?
TSMC, Japan, and potentially India if it can execute. The geopolitical fragmentation of the semiconductor supply chain is creating winners and losers, and the clear winners so far are the countries that position themselves as manufacturing anchors outside both the US and China. Taiwan being the most obvious, but also Japan and potentially Malaysia and Vietnam as the China plus one strategy continues to play out. Exactly. And here's the ripple effect I want to highlight. TSMC's decision to potentially upgrade Kumamoto Phase 2 to 2 nanometer is not just about AI chips. It's a signal to every Japanese automotive company, every European industrial company that needs advanced chips for EVs and robotics. There's now a geopolitically neutral advanced node fab outside of Taiwan. That is genuinely new, and it changes supply chain planning for thousands of companies.
I hadn't thought about it that way. It's not just about AI, it's about the entire industrial chip ecosystem.
Right. And the $56 billion capex number, that's TSMC building a moat so wide that no single geopolitical event, not a Taiwan Strait crisis, not a US election, not a Chinese trade retaliation, can cut off the global supply of advanced semiconductors.
Which ironically makes them more powerful than any government in this entire story.
That's a line I'm going to be thinking about all week.
All right, time for Contrarian Corner, and I want to challenge what I think is the dominant consensus narrative right now, which is that the US-China AI chip war is a strategic disaster for the United States and that DeepSeek proved American export controls are futile.
That is basically the consensus. I've heard it from every analyst I've talked to in the past 2 months.
Right, and here's my contrarian take. What if the export controls actually worked exactly as intended, just not in the way anyone expected?
Okay, walk me through that.
The original stated goal of chip export controls was never to stop China from doing AI. It was to slow them down enough that the US could establish an insurmountable lead at the frontier, the absolute bleeding edge of AI capability. And here's the thing, DeepSeek is impressive, but it's not at the frontier. It caught up to models that were already a generation old. The best American labs are still running on hardware that China simply cannot replicate.
That's a fair point. DeepSeek's efficiency breakthrough was in inference and training optimization, not in raw model capability at scale.
Exactly. And what the export controls did do is force China to invest enormous resources in catching up to yesterday's technology, which means fewer resources for leapfrogging to tomorrow's technology. Meanwhile, TSMC is deploying 2-nanometer chips, and China's SMIC is still struggling to reliably manufacture at 7 nanometers with workarounds.
So the argument is that export controls bought time, maybe 2 to 4 years of technological lead, even if they didn't stop China entirely.
Right, and here's the deeper point. That lead is being used. Nvidia's Blackwell architecture, which China cannot legally access, is a generation ahead of the H200. Anthropic and OpenAI are training on compute clusters that don't exist in China. The gap at the frontier is arguably wider now than before export controls, even as the gap at the mid-tier has narrowed.
I have to admit, that reframing changes how I see the whole DeepSeek narrative. Everyone said DeepSeek proved export controls failed. Maybe it actually proved they worked at the level that matters.
Well, actually, let me rephrase that slightly, because there's genuine uncertainty here. The honest answer is we don't know yet. What we do know is that the US is spending, collectively, hundreds of billions on AI infrastructure. That's $650 billion figure Bloomberg cited for big tech's AI capex this year, while China is spending enormous resources trying to replicate chips that SMIC cannot yet make reliably.
And Huawei's Ren Jingfei saying they'll hit 70% semiconductor self-sufficiency by 2028, that's still 30% dependency at best in 3 years.
In a sector where 30% dependency can mean zero advanced AI chips if relations deteriorate. Think about that.
Okay, here's the question I want to throw at our listeners, and I mean this as a genuinely open question, not rhetorical. If you're a CIO at a major Asian conglomerate right now, whether you are in Korea, Japan, Singapore, or India, how do you build a technology strategy that doesn't get caught in the crossfire of US-China decoupling?
That's the real business question underneath all of this geopolitics.
Because Samsung has to sell chips to both sides. TSMC has to be politically neutral while being economically dependent on American customers and Taiwanese government backing, and Indian companies like Reliance are taking money from US tech giants while also maintaining their relationship with Beijing.
And the Korean semiconductor industry is in perhaps the most delicate position of all. Samsung and SK Hynix both have massive operations in China, supply chains deeply integrated with Chinese manufacturing, and they're being pressured by Washington to limit technology transfers while simultaneously being pressured by Beijing not to decouple.
That's a genuinely impossible position.
It's not impossible, it's just incredibly expensive to navigate, which is why the companies that are winning right now are the ones that have essentially said, we're going to invest so much in becoming indispensable to everyone that no government can afford to sanction us. TSMC is the master of this strategy. They're indispensable to Nvidia, indispensable to Apple, indispensable to AMD, indispensable to the Japanese auto industry. Nobody can cut them off without hurting themselves.
And that's actually the question for India too, right? Can they build something indispensable fast enough to become a structural part of the AI supply chain rather than just another market?
Exactly. And the $200 billion ambition is real, but the execution gap is also real.
Bloomberg's February analysis of Modi's AI summit was titled, "Modi's Chaotic AI Summit Showed India's Clout and Constraints," and that word chaotic is doing a lot of work. The ambition is there. The infrastructure, the regulatory environment, the private capital, those are still works in progress.
Okay, so where does all of this leave us? Let's get to action items.
3 things for investors and business leaders. First, TSMC is the single most important company in global tech right now, full stop. If you don't have a position, if you don't have a view, you're flying blind. The $56 billion capex, the 36% revenue growth, the Kumamoto expansion, this is a company executing at a level no competitor can match. Goldman's price target revision to $930 Taiwanese might still be conservative. Second, don't sleep on the Japan semiconductor renaissance. The TSMC Kumamoto investment is catalyzing a broader ecosystem. Japanese materials companies, Japanese equipment manufacturers, Japanese automotive AI chip demand. This is a multi-year, multi-sector trade. It's not just about TSMC. It's about what TSMC's presence does to the entire industrial cluster around it.
And third,
be very cautious about the India AI story at current valuations. The ambition is real, the talent is real, the market is real, but the $110 billion Reliance number and the $100 billion Adani number, treat those as aspirational announcements until you see shovels in the ground and contracts signed. Private capital is still not flowing into the Indian AI startup ecosystem at the rate you'd expect given these headlines. The public market premium is pricing in a lot of execution that hasn't happened yet.
Those are 3 very actionable, very specific takes. I want to add one more observation from my perspective, which is this. The US-China chip war is fundamentally reshaping what it means to be a neutral country in Asia. Japan, India, Singapore, Malaysia, they're all being forced to pick sides, or at least to pick lanes. And the countries that figure out how to monetize that neutrality, like TSMC monetizing Taiwanese manufacturing expertise, are going to build enormous geopolitical and economic leverage.
Well said. And that, I think, is the big takeaway from today. The chip war looks like a 2-player game between Washington and Beijing, but the real opportunities are for the countries and companies that are essential to both sides. TSMC gets this, Japan is learning it, India is aspiring to it. The question for 2026 and beyond is who else figures it out fast enough?
Coming up next week, we're going to dig into Korea's impossible balancing act. Samsung and SK Hynix caught between Washington's chip alliance and their China production footprints. It's a story of billions in stranded assets, political pressure from 3 different governments, and one of the most complex supply chain pivots in industrial history.
Stay data-driven. Bye.